The global COVID pandemic has not only caused a health crisis, but has also exposed those already in a poor financial position to even more uncertainty and possibly even devastation, especially if they had no emergency savings and took a pay cut or lost their job. There are those who still have their jobs and whose employers provide them with important benefits, from retirement savings to life cover, medical aid, and support and assistance for mental well-being. In most cases, these are all the savings and protections they have. We know that financial difficulty is so stressful physically and emotionally. And to try and manage this, some people are thinking about stopping, cashing in, or reducing their employee benefits to give them some short-term financial relief. And they do so without understanding how this affects their ability to retire, provide for their family, and care for their health. Which is why we're making every effort to raise awareness of how important these benefits are to your employees, to make you aware that the financial stresses they may be under might drive them to make financial decisions that have long-term consequences, to encourage them to get advice in times like these. Because despite the uncertainty out there, your employees can count on our advice to help achieve financial well-being.
Good morning and welcome to the second edition of our Hot Topics webinar series for 2021. We always appreciate you making the time to join us and to share in the conversation about interesting and topical things that affect us within our industry. Today, we have two specific themes that we'll be looking at. First one being the value of group risk benefits, and we'll be unpacking various insights that we've been able to put together and hopefully have a very meaningful conversation about how things have changed or shifted more so during the COVID pandemic. And of course, leading on from there, as a second theme for today, we're going to be looking at the impact of long COVID from a health point of view and looking at how this has influenced decisions that we need to make for ourselves as businesses, but also for our clients and their members who are affected by what's going on around us. My name is Leroy Munetsi, and I'm the Chief Operating Officer for our consulting platform at Alexander Forbes. And without further ado, I will now introduce Belinda Sullivan, who is our first speaker for the morning. Belinda is the head of our corporate consulting strategy area, and she's been in the industry for north of 20 years. Armed with a Bachelor of Commerce as well as the CFP designation, she's responsible for crafting and implementing a lot of the consulting frameworks that we use within our business and how we engage yourselves from a consulting point of view. Please join me in welcoming Belinda to the stage to discuss and unpack the value of group risk benefits.
Thank you, Leroy. Good morning, everyone. Today, we're going to talk about group risk benefits during a pandemic and how these benefits have supported your employees and members. Most South Africans rely on group benefits provided through their employer and their retirement funds. These benefits provide protection to employees and their families, ultimately covering their health, home, and overall well-being. Identifying the needs of the employees and the intention of what and how these benefits should cover them forms the basis of the employee benefits program. The solutions must also then tie in with the holistic employee benefit proposition provided by the employer. The pandemic has placed a greater focus on the importance of group benefits. If we look at how this has supported individual households during this time of need, we consider the death benefits. It supported the homes in the event of a death in the family. It's also provided funeral benefit coverage, so where there is a subsidy or a partial subsidy for immediate or extended family benefits in the event of a funeral. Disability income claimants, while not really impacted by COVID at this point in time, they do enjoy the benefits of their group life funeral benefit schemes and also continue to contribute to the retirement fund. This means that if there is a claim, they get the benefits paid out, and if they get to retirement, they still have access to their savings. Most employees rely on their employer to provide the benefits, and this is access to savings to benefits that they may not necessarily have in their personal capacity. So they don't need disposable income in order to be able to afford these benefits. The cover is compulsory, which means that if they are experiencing financial difficulties, the cover doesn't lapse. And it's also important in terms of their personal financial planning. It helps where there is shortcomings or lack of a plan. On the other side, the other positives relate to the economies of scale with the group benefits, as well as the cross subsidies, making sure that the pricing of these benefits is affordable for your members and employees. An additional benefit is that there are set medical free cover limits that members enjoy cover up to without having to provide evidence of good health. In addition to the group value proposition, members and their families rely on the benefits provided by the employer. And in fact, in most cases, the employer is the first port of call in the event of a claim. So it is really important that the risk benefit offering is aligned to the fund rules, the employer policies, as well as an integrated health strategy. This ensures that you're not only looking after an employee at a particular point in time, but making sure that there are early interventions via the workplace. This will also have a positive effect on the long-term claims experience as well as the pricing of these benefits. So at the same time, we need to have comfort that the insurers that we partner with are also sustainable. We undertake a rigorous exercise in terms of due diligence every 3 years. The process is forward-looking, and we really wanted to assess the impact of the last few months in 2020 on the long-term sustainability of the insurers. It's important for us to be able to confirm to you, our clients, that we've conducted a due diligence on the service providers presented in a rebroking exercise. So where are we now if we have to consider what has happened? So almost 500 days of lockdown, the trends have been manifesting, and we're starting to see different aspects coming through. In South Africa, experiencing our third wave, the vaccination is key to slow down or to limit the impact of future waves. We have approximately 8% of the population that's been partially vaccinated, while 3.5% have been fully vaccinated. So we also have members who are experiencing direct impact of COVID. So they've been ill, they've experienced term effects after being ill, they've lost loved ones and friends. We also have the indirect impact of COVID, which is the economic impact, as well as the anxiety and depression that people are faced with the further lockdowns and the stress that they're feeling during this time. 4 of South Africa's largest life insurers reported increases of between 50 and 60% of death benefit claims between March 2020 and 31 January 2021. This was looking at the individual life insurance market and approximately 70% of the market premiums. It was anticipated that the deaths would track the national death rate. However, these during the second wave peaked at 4 times the expected death rate. In terms of the country as a whole, the excess death rates were at 2.8 times the expected rates. So this graph covers the excess deaths relative to the forecast deaths, which you'll see is the orange line. We're covering all 4 provinces, which gives you an indication of the excess deaths experienced since the 3rd of May 2020. Now, these additional deaths could be attributed to COVID, but what we do need to understand that the experience, whether it's COVID or not, is still filtering into our group risk space. From an operational perspective, some insurers felt that they would need to gear up their operations departments to deal with the increased volume in claims coming through. There was a view that the healthcare system would come under greater pressure, and therefore we would need to manage these claims more efficiently. With the increase in the claims in the second and the third wave, we do see that the insurers are experiencing a tremendous impact on their turnaround times, especially in the funeral benefit space, where some have indicated that the claims that they are receiving are more than triple the claims that they normally receive. From a pricing outlook, we first initially envisioned that only disability income claims would be impacted by the socioeconomic conditions. What we have seen coming through from a trend perspective is that the death claims and funeral benefit claims are now starting to increase rapidly. These trends obviously vary per sector, and we continue to monitor that as to see which sectors are more impacted than others. We have seen some insurers indicate that they are increasing their base rates. That's an adjusted rate of individual rates on the average basis. And you'll see these rates coming through in your renewals. In fact, if you go out to market on a rebroke, you'll see that the increase in your rates are relatively in line with what the rest of the market are viewing. In order to better understand our AF book, we looked at the period 2019 and 2020 and looked at the volume of claims, so the number of claims coming through, as well as the value of the claims and how that impacted the death benefits, disability income, and funeral benefits. The insurers provided various input around the results of what they had seen and what they expect will impact future claims experience. Just some of the insurers that participated in our exercise. The graph that you're seeing looks at the claims, values, and numbers. That is the change in the claim numbers between 2019 and 2020. If we look at the death benefit side, you'll see that there has been a significant increase in the value of the claims coming through. And that's really depicting the fact that we have higher income earners and older members potentially claiming benefits. On the funeral benefit side, we also see an increase in the average of the funeral benefit rates. The disability income side, most insurers noted that the claims experience was relatively stable. However, they did indicate that there was an increase in the values of the claims despite very little movement on the numbers. In terms of the number of claims, you can see that there has been a dramatic increase in the number of claims that have come through. And we do see that this varies from insurer to insurer as to the level expected. On the disability income side, we see that the numbers have reduced, and some have indicated that that could potentially be as a result of COVID, where individuals are passing away before the claims are going through. On the funeral benefit side, we also see a significant increase in the funeral numbers, particularly in the extended family benefit space. From a death benefit perspective, we looked at who was at risk, and initially it was really people with comorbidities and the older population. And it was felt that the claims experience wouldn't be as impacted because of the benefit termination age. So a benefit termination age of 60 or 65 would mean that there would be limited impact on the claims experience. However, with the second and the third wave, we've seen that the claims experience has been impacted by individuals aged 50 to 60, which therefore impacts your group scheme experience. Disability income claimants obviously already suffering from comorbidities and are therefore vulnerable in this space. Other concerns that came about were mental health, and we have seen an increase in suicides as well as depression and anxiety. It was also a concern that we would get to a point where, although individuals had medical aid, for example, the healthcare delivery would become compromised. So individuals wouldn't actually be able to get the care they needed from a hospital. And that we saw coming through really strongly during the second and the third wave as well. From a claims perspective, it was noted that the average insurers saw an increase in the number of death claims. The average value had increased as well. And these claims were a result of COVID because they were most likely linked to the first wave and part of the second wave. The full extent of the second wave and also the third wave now would really come through in our 2021 claims experience. The claimants were also noted to be generally older and also the higher income earners, which therefore we saw the increase in the value of the claims. The claimants may also be a result of those who were potentially in the waiting period for disability income benefits and then succumbed to COVID. From a pricing perspective, the insurers have indicated that they are looking at pricing adjustments. Some have adjusted their book rates through age-adjusted ratings. And this is really prior to the third wave and the full impact of the second wave as well. The larger schemes would be priced based on their own specific claims experience and would start to see those numbers changing as well. We have seen, as I've highlighted earlier, that the renewals, we're seeing quite an increase in the rates already coming through. On the disability income side, initially during lockdown, the hard lockdown, individuals didn't have access to medical facilities, transport, or to their companies to be able to get information for their claims. As the lockdown levels sort of normalized, we did see those claims start to filter through. Now, while the impact of COVID-19 itself hasn't had a significant impact on disability income or lump sum disability benefits, it was noted that the waiting periods could have played a part in this. In other words, individuals who were sick with COVID may have recovered within the waiting period and returned to work, or alternatively passed away during the waiting period and therefore became a claim under the group life benefits. From a pricing perspective, there is still concern around the socioeconomic conditions, which were highlighted back in 2019. From a long COVID perspective, the insurers are also indicating that they expect that these will start to come through in the numbers and the claims into the future. So from a disability claims perspective, most insurers indicated a relatively stable number of claims, and this is on the back of concern around the sustainability of PHI benefits given higher claims in prior periods. But what they've also seen is an increase in the value of the claims, which notes that higher income earners are claiming disability income benefits. It is also expected or anticipated that the reduction in the claims may be a result of individuals who are during the waiting period perhaps succumbing to COVID during that period. They also anticipate that there will be an impact of long COVID on the claims experience, which Myrna will unpack in her presentation. The biggest concern that has been for insurers and used to be is obviously the socioeconomic conditions and the impact on the claims experience. Lump sum disability benefits have been relatively unimpacted, and that could also be a result of the longer waiting periods. So again, looking at potentials in that period who may have succumbed to COVID and therefore impacting on the group life claims experience. From a pricing perspective, the renewal increases are expected to be based on claims experience, and you'd be seeing those increases coming through relative to your claims. Funeral benefits provide scaled benefits for immediate and extended family members. The age demographic of the overall insured lives is quite different from the normal group benefits in that it caters for benefits of extended family members as well as the immediate family members. And what we have seen coming through, especially on the extended side, is a significant increase in the number of claims. So we also see the increased claims, but with that, we've seen an increase in the value of claims. And like I said, this is really coming through on the extended family benefit side as well. Now, the insurers have noted that the claims experience is obviously tracking the death claims experience, and that would be a result of your member on your fund passing away, and there's a corresponding funeral benefit paid as well. On the pricing side, the insurers are looking to adjust book rates if they have not already, and on larger schemes, really adjusting the rates based on the claims experience. So thank you very much, and back to you, Leroy.
Thank you, Belinda. That was very insightful. I always appreciate how you're able to demystify and simplify topics which can be complicated and make it easy enough for us to work with. No doubt the value of group risk benefits is very important, more so in the operating environment affected by COVID, as well as the many things that are going on around us. And it's always useful and valuable to work with the information and the knowledge that you share with us. Thank you very much, Belinda, for your time. Moving on to the second topic for this morning, which is quite simply the impact of long COVID. Myrna Sachs, who heads up our health management solutions area within Alexander Forbes Health, is going to unpack the different insights that they've been able to compile, and hopefully we'll be able to glean some very useful elements to take us forward as we need to make decisions in and around the impact of COVID. Myrna has been with the organization for many years and is definitely a knowledge anchor for us as Alexander Forbes, and no doubt in the industry as well. And she and her team are actively committed to contributing to important conversations like this. And we look forward to your comments, your questions through the chat functionality. We will curate the information that you share with us and address as much of that as we can towards the end of the session. But without further ado, please join me in welcoming Myrna Sachs.
Thanks, Leroy. So what I'm going to cover today is more long COVID or long hauler syndrome. There are quite a few names for it, and the impact that it actually has on the workplace. If we look at some studies that have happened already over the past 15, 16 months, what they're finding is that 10 to 30% of patients, more than a year down the line, are still struggling with long-term consequences. And they don't know what it is, and that is the problem. What they're finding is that the effects on the immune system and inflammatory processes in the body persist. Some recover after the 10 days, others, the persistence is there for 3, 4, 5, 6 months later. Long COVID or long hauler syndrome doesn't appear to be linked to the severity of COVID-19. So what they are finding is that even if you were in ICU, you may not have long COVID, but someone who was totally asymptomatic, had no symptoms, developed something after 12, 14 days, the fatigue, the brain fog, even though they were totally asymptomatic. Okay. If we just look at definitions to put in perspective, acute COVID is the initial phase. So signs and symptoms from 1 day to up to 4 weeks. Most people recover within the 10 to 14 days. But some do just take a little bit longer. So that is what the acute COVID is. If we look at post-acute COVID, it's the ongoing symptoms for up to 4 to 12 weeks. However, anything longer than 12 weeks is what we call long COVID or post-COVID syndrome. So that's where signs and symptoms develop during or after the infection, and it's consistent with COVID, but it continues for 3 months, 4 months, 5 months, and we've got individuals who are now a year down the line still are suffering from long COVID symptoms. And there are also many terms that they use: long COVID, post-acute sequelae of SARS, chronic COVID, long haul, long haulers. But for this webinar, I'm just going to call it long COVID, but it encapsulates all of it. A few studies have been done. One, a study of 4 million users using an app, a COVID symptom study app, found that 1 in 44 people recovered after 4 weeks, but 1 in 22 still had symptoms 8 weeks after. In the Lancet Medical Journal, they found that 10 weeks post-COVID, 1 in 10 still had symptoms. So there's definitely an issue at play here, and it is affecting and is going to impact on the overall work performance going forward. There's still no clear treatment pathway. We still don't know what is going to happen tomorrow. We also don't know how long COVID is going to be there. There's minimal information at the moment, but it's evolving, and it's all evidence-based. This is just a picture of what someone actually looks like who's suffering from long COVID. They're just a whole lot of shattered glass, if I can put it that way. What we're finding from current experience, and what we've one of the big insurance companies has done a study in the past month, and what they found is that income replacement cover is 3.5 times greater year on year. So what Belinda depicted up until January 2021 was that the claims experience was still small on the disabilities. It's starting to pick up. And we do think that it's the long COVID that's at play here. The highest cause of claims is infectious diseases, which is where COVID sits. And it's the first time that infectious diseases have been in a double-digit percentage. Initially, it was maybe 5-6%. Now it's over 10%. There's been a 25% increase in payout amounts for disability claims. And on total underwritten claims, death and disability, there's been a 61% increase in the respiratory system, which generally will tend towards COVID. What we're finding with long COVID is that the most significant condition is the respiratory issues. And also people are dying from the COVID pneumonias and the respiratory issues. They're going onto ventilators and unfortunately succumbing to COVID. So that is why there has been that significant increase. How do we as an employer, as a fund, as HR actually manage this? So we need to follow some guidelines. And NICD, the South African guidelines, have actually set out some very good guidelines on what to do. And NICE, which is the UK guidelines, also give very good guidelines on the best way forward. One of the best tools, though, is to use screening or telemedicine questionnaires to actually pick up who has long COVID and who do we need to manage within in the workplace. So what we're actually developing for some of our clients currently is actually a long COVID toolkit, which looks at questionnaires that people can ask. And what you do is with the questionnaire is you get the person who's had COVID to complete the questionnaire 4 weeks post-COVID, 8 weeks, 12 weeks, 16 weeks. So at 4-week intervals to see if there is a pattern and if it's something that we do need to look at. So if we look at the clinical characteristics of COVID, which then also talks to long COVID, you commonly have 3 or more symptoms and signs, and they persist for longer than 4 weeks. Fatigue, exhaustion, cognitive aberrations, and also they affect people differently. And often people feel very tired, but they dismiss it. They take it as non-consequential. It's not important. I had COVID. I'm still recovering. It'll go away, but it doesn't, and that's the problem. So people are ignoring the signs, and we need to make people more aware that there is this long COVID in place. So as I said just now, the long-term symptoms look at fatigue. You've got this chronic cough that lingers, shortness of breath, inflammation and injury to major organs, which I'll come into more detail just now, and then the damaging neurological and psychological effects. I think what we need to remember is someone who's been in ICU on a ventilator, post-traumatic stress, it's going to be with them. The mental issues, the depression, anxiety, suicidal ideations are going to be there. And also what we need to remember, I know we're focusing on long COVID now, but it's also lockdown, and the isolation of lockdown also has an impact on the mental health of individuals. So it is something that companies do need to take into account. And also the overall decline in health-related quality of life they're picking up is very similar to autoimmune conditions. And there are definite increased inflammatory markers that they're picking up. So just in an easier overview to look at, shortness of breath, concentration. From a concentration, it's what they call brain fog. I don't know if any of you have experienced it. Your mind is a blur. You just can't remember. So you sit up and walk to the kitchen and you actually don't know why you did that. And yes, I know some of us often feel that way, but it's a consistent feeling. that people have. There's muscle and joint pain, disturbance of sense and smell. How many people who've had COVID, they lose their sense of taste and smell, and it takes 3 to 4 to 5 months to come back. However, the sense and smell won't necessarily impact work performance unless you're working as a taster or a chef. So there are things that we need to look at when looking at jobs as well. So from a French study that they did, they found that 55% of people who had COVID 3.5 months later still suffered from that severe exhaustion. 35% still showed persistent fatigue 2 to 3 weeks later. That was in another study. These were done on milder cases. The South African experience showed that 63% of individuals who had COVID 6 months later still had persistent muscle weakness and fatigue. So it's quite significant. In a study of over 3,000 participants, what they found was that symptoms persisted for 6 weeks. It was unpredictable. So 2/3 of the population experienced the symptoms up to 6 weeks. Most prominent was fatigue, post-exertional malaise, the brain fog, and the headaches. And everyone talks about the patient in hospital or ICU, but a huge number of these individuals actually weren't in ICU or weren't even in hospital. So they were at home, they had mild symptoms, but they had the lingering effects of long COVID thereafter. Okay, if we look at the primary factors influencing return to work, fatigue and persistent symptoms are going to have an impact on your day-to-day functioning. So if you are working a normal working day 8 to 5 and you are severely fatigued, you're not going to manage those 5 hours or 8 hours. You're going to need to rest in between. So that'll definitely have an impact. The mental health factors, anxiety, post-traumatic stress, depression, sleep disorders. If you don't get a good night's sleep, you cannot function during the day. And all this also impacts then on meeting clients and employers' expectations. So your client and your employer expects a certain element of productivity from you, but you actually aren't meeting that. And that also then impacts on your mental health because you're anxious about it all the time. So it's like a vicious cycle and a domino effect. The PTSD and depression also has your effect on working efficiently, managing your finances, making informed decisions. So if you have to make decisions every day at work, are they informed? And are you able to concentrate and make the correct decisions? Impact on daily family activity. So it's not just work that's being impacted. It's also your family and home life that's being impacted. From the neurological disorder perspective, it's memory and attention, focusing, cognitive function. And also what they're picking up now is the neuropsychiatric consequences, which is also playing a part. And then impact on behavior. And it's not just long COVID where this plays. It's also, as I said before, working from home, the isolation. It's that fear and uncertainty. And it is uncertain because we don't know what tomorrow brings. And everybody is individual. Nobody has the same response. So we need to remember that all our employees will respond differently. As an employee, and we all are employees also, not just fund trustees or HR execs, we're also employees. People who are experiencing persisting symptoms, they don't understand or recognize it. So they don't do anything about it. And that's the problem. So we're not treating it early enough to mitigate the long-term effects. And I said the conditions are being downplayed and dismissed. And employees are returning to work far too early. So they're not giving their body time to react, to respond to treatment, to rest, and to recover because they are scared that they're going to lose their jobs. And unfortunately, that is a consequence at the moment. So if we look at interventions, and how do we mitigate this? And how do we need to mitigate this to actually make sure that our disability claims don't increase so that we mitigate the effect of increasing rates continually. So we need to acknowledge and be a witness, honor the experience, acknowledge the person, I understand, and yes, you are going through this, and not say, it's all in your head, you'll get over it, move on. We need to actually acknowledge it. It's also not a typical return to work planning that we have to put in place. You don't need new policies. That's not what we're saying. It's an incapacity. So your incapacity policy that you have in place should still hold. But it needs some adjustments to the return to work. Some accommodated return to work and graded return to work needs to happen. We need to manage the expectations of both employer, client, and employee. We need to understand what the person does and what they can still do and what they can't do, and make sure that the job demands are dealt with. And we need to use technology. We need to have face-to-face catch-ups. You need to actually have cameras on so that you can actually see the nuances. You can't, if I'm just talking to my screen all the time and I'm hearing your voice, I don't pick up the nuances, your body language. So we need to make sure cameras on when we have those catch-ups. And adaptability and flexibility is key. It's moving. It's a moving target. Today I might feel great. In 2 days' time I might feel terrible. So it needs the return to work also needs to be flexible. If we look at how do we support, what we need to remember is what we found is with some of our clients, some have had COVID sick leave, separate from normal sick leave. They've had additional leave, they've had extended leave, special leave, but they've made sure that their policy aligns to it, so that you're also not getting the opportunistic users who then just make use of the fact that I had COVID, now I'll pretend that I've got long COVID to take more leave. But companies do need to relook at their leave policies to see that we actually are supporting the individuals who will need to be off work for an extended period of time. They can't come back to work after the 2 weeks of COVID leave. So we do need to look at that going forward. For the individual who's suffering from long COVID, energy conservation, pacing, goal setting, graded activity exposure and participation. And as the employer, we need to be patient and not push them to come back too early. Mental health care is vital. And I know Belinda, in the previous presentation, spoke about the integrated approach, and mental health care is part of that integrated approach. Employees need to be aware of what support services are out there, and HR needs to help with that facilitation and reintegration back into the workplace. But also, we need to empower the individual to look after themselves and do the right thing. And celebrate the small wins. All the small wins add up. And the more positive reinsurance there is, the quicker someone will get back to normality. One thing that we have to make sure, and this has been throughout the whole of COVID, it doesn't just talk to long COVID. There has to be clear, honest, open communication with the employer early on. So between the employer, the employee, the medical practitioners, there needs to be clear, open, honest communication. There can't be any false hope or false pretenses. We need to make sure that everybody knows what is expected of everybody. Okay, how do we overcome these concerns? What we need to make sure is early intervention is key, because then you can pick up early and put interventions in place. And that's where the questionnaire comes in, so that you can actually pick up if someone is struggling rather earlier than later. Telephonic and virtual check-ins are important. And as I said before, camera on, so you can pick up the nuances and you can see if someone is struggling. Support needs to be offered for short-term difficulties as well as the longer-term management. And if HR doesn't know how to deal with the longer-term management, call in people who do understand. Call in health risk managers, call in the occupational therapists to actually assist with this intervention and further referrals going forward. There needs to be an integrated approach and cross-referral between your EAP, company's medical scheme, any wellness initiatives that companies have. And what we're doing for some of our clients now is actually integrating it all. So looking at your medical aid data, your disability data, your absenteeism data, looking at hotspots and trends and seeing where we need to put in some interventions. How do we identify our employees at risk? So you have your questionnaire, you know who's had COVID, you monitoring forward, but you also need to understand the impact that COVID-19 has had on your sick leave utilization. Now, where this comes, the issue comes in is during lockdown, what was absenteeism? We weren't at the office, we were absent. So how do you actually manage that? And someone who was sick didn't actually put in sick leave. So if I'm feeling a bit sick, lie down for a bit and then I'll work a bit and then I'll come back and then I'll go lie down a bit. I never actually put in sick leave. And because I wasn't traveling to back, there wasn't that stress either. So that also helped with that. But the problem is people who were sick weren't resting and they weren't recovering. They were sicker for longer, and then the immune system was also low, so they were more prone to getting COVID and getting sick from COVID also. So that definitely played an impact. If you look at the sick absence ratios, in 2019, on average over our client base, it was at 2.15%. However, in lockdown 2020, and you can see in the graph how it just goes down, it went down to 1.6% because of the underreporting. So it's twofold, though. Underreporting, and also because we were in lockdown, people weren't getting sick from the normal flu. So the flu season actually didn't happen in 2020. But we're definitely seeing an upward trend now that workplaces are open and people are coming back to the workplace. And 2021, we already picked up that it's sitting at 1.85%. We're moving more back towards the over 2%. But there's still significant underreporting. And companies need to make sure that they're managing this, because the indirect costs are what actually hit a company at the end of the day. And the benchmark is that indirect costs on sick leave cost the company 3.5 times or 2.5 times what actual sick leave costs. So that can work out to billions at the end of the day. Employers are advised to also adopt a holistic approach. So it needs to be a partnership between all players who look after the employee's health and well-being. So your EAP support needs to talk to your absenteeism management team, needs to talk to your occupational health team, so that we are holistically looking after individuals and not in silos. Also, what we need to do is that your policies also need to talk to each other, so that if someone is injured on duty, they don't have to do ABC, but if they had an accident outside of the workplace, they have to do XYZ. So we're not confusing employees, so that they know that the same process applies throughout, and that there's a partnership, and we are actually looking after the employee's health at the end of the day, health and well-being at the end of the day. So just in conclusion, we need to remember that the symptoms of long COVID are diverse, and they vary between individuals. And they can change and fluctuate over time. How I feel today is not how I'm going to feel tomorrow, and each individual is going to react differently. It's important for managers to discuss the conditions with employees and understand what support is needed, because also not all employees need the same support. Some might need more, some might need less. Flexibility in the workplace and accommodations are important to mitigate the increase in disability claims, because it's not only looking after the employee's health and wellness, it's also making sure that there's cost containment going forward. And if you are recovering from long COVID, you need to look after yourself and have good mental hygiene. Get enough sleep, regular exercise. But if you have had COVID, when you go back to exercise, please be careful, because the cardiac system, the heart is affected by COVID. And that's also what's happening, is they're finding people are exercising too soon and having heart attacks post-COVID. So gradual return to work, return to exercise, eat healthily, and also, just in conclusion, take out time from digital services. We're all in overload, virtual meeting to virtual meeting, virtual meeting. Take time out, switch off social media, and just switch off. Thank you all. Thank you, Leroy. Back to you.
Thank you, Myrna. That was really, really valuable to hear some of the insights that you guys have been able to pull together in relation to COVID. No doubt a lot of research is going on and will continue to go on for us to better understand the impact of COVID on all of us across not just South Africa, but the entire globe. Thank you so much to you and your team for sharing these very useful insights, and we look forward to continuing the conversation. To those of you who have joined us this morning, I again invite you to use the chat functionality so that we can address any questions that you have, and also appreciate any comments and insights that you can share with us, so that the conversation is wider than just the research that we've compiled, and we can all learn from each other in these very, very important topics for our discussion and our benefit. Progressing with our webinar for this morning, No doubt we have all experienced the unfortunate circumstances that affected us as a country recently with the unrest in KwaZulu-Natal as well as in Gauteng. And we, as Alexander Forbes, thought it would be valuable for us to have a conversation around war and riots from an insurance point of view and take the opportunity to express our view on how unfortunate these events have been, in that they've adversely impacted us as a country and more specifically as our clients. It trickles down to a member level, and I think we are very concerned about what has happened, but at the same time galvanized to work together to rebuild from where we are. As Alexander Forbes, it has affected us as a company, and some of our staff were very directly affected, but no doubt we believe that working together we can do what is necessary to rebuild the country and rebuild those specific environments that have been directly affected by this. And we are sensitive to how this is definitely an emotive situation that has affected us all as a country. So we're looking forward to working with you and finding ways to make sure that we come out on the other side bruised, but not broken as we take things forward. So let me introduce again Belinda Sullivan to take us through a conversation from an insurance point of view, specifically looking at war and riots and how to best navigate the situation that we find ourselves in. Over to you, Belinda.
Thank you, Leroy. And I think war and riot has become a key topic over the last couple of weeks. And today we're going to just unpack the group life policies and see what the impact is for your employees and members of the funds. Now, with the rioting, looting, and civil unrest, it's created a lot of uncertainty for everyone. And we've had a lot of questions around how would a claim be affected in the event of someone basically actively participating in the looting and rioting, or if there's an innocent bystander and one of your employees or members are one of those impacted. Now, all policies have very specific conditions around war and riot. So whether there is active participation, whether you are directly or indirectly involved in the claim. And each claim would therefore need to be carefully considered by the insurer at claim stage and to assess what was that participation at that point in time. Now, if an insurer excludes a claim, the onus sits with them to prove why they would be excluding that claim and that, in fact, it is valid to exclude the claim. The policy states, in terms of the general exclusion, that any benefit payable if the death or disablement is directly or indirectly caused by, resulting from, or in connection with active participation by the life insured in any of the following. Now, active participation, key. In war, hostilities or warlike operations, whether the war is declared or not, an invasion, an act of an enemy foreign to the nationality of the life assured or the country in or over which it occurs, civil war, insurrection, revolution, overthrow of a legally constituted government, civil commotion, assuming the proportions of or amounting to the uprising is against an established government, military or usurped power, or terrorism. So cover, in terms of assessing whether there would be an exclusion or not, we need to just unpack a few examples as part of our discussion today. So cover is excluded for those participating in the riot, looting, or criminal behavior. But the question is mainly around those innocent bystanders, those who are trying to prevent it, provided the conduct is lawful. Now, the key here is looking at active participation. Now, in example one, an employee at their workplace is at their workplace when looters descend on the store, and in their capacity as an employee, they try to stop the looters and are injured or killed. In the second example, members of the community stand outside their store, and we really did see this happening, particularly in KZN, where individuals were standing outside their store, hoping that their presence would deter the looters from targeting the store. Now, in the event that a community member is injured or killed in this instance by a looter, we need to consider what that impact is. The last example here is a member of the community drives past, sees that the store is being looted, and decides to take matters in their own hands and engages in unlawful conduct. And the looters retaliate, and the individual is injured or killed. So if we consider example 1 and 2, it's more likely that the insurers may consider that as a valid claim and not exclude it, but they would have to still consider the merits of the claim that's been submitted and may require additional information. If we look at example 3, the insurers could potentially repudiate and exclude that claim on the basis that A, there was participation and unlawful conduct in that. So again, coming back to, is there active participation? Is there unlawful or criminal behavior involved? And the general review or the general view from the insurers that we've received is that individuals who are protecting their property, person, family, suburbs, for example, would not be considered as an exclusion. However, in this instance where we have an innocent bystander or someone who is protecting on that basis, the insurer may request additional documentation in order to review and support their assessment of the claim and consider whether the exclusion would apply or not, bearing in mind that the onus to prove the exclusion rests with the insurer. So each insurer may have a different approach to reviewing the claim and require different documentation. And therefore, if you have any questions around your particular war and riot exclusions, chat to your consultant and get the express view from your actual insurer. Thank you. Thank you, Leroy.
Thank you, Belinda, and a big thank you to both you, Belinda, and to Myrna. I think it's been very insightful to have the conversation that you guys have taken us through, and I think we've come some way looking at the different topics for today, and a very big word of appreciation to everyone who's on the call with us this morning. We've got quite a few questions and comments that have been coming through, and we're going to take some time now to try and work through as many of those as we can in the remaining amount of time that we have. So just to kick off the Q&A section, I'm going to direct the first question to Belinda, and someone who noted themselves as anonymous has asked the question around what organizations can do proactively to decrease the number of claims from the scheme in an effort to keep the costs of cover as low as possible. They further highlight, and I guess this comes from your first presentation, that the claims history has an impact on the cost of cover and can result in substantial increases from one year to the next. In addition, they add and ask, can a ManCo contribute to keeping risk cover rates as low as possible to maximize the portion of contributions allocated towards savings? It's a bit of a mouthful, but I hope you can give us a response, Belinda.
Thanks, Leroy, and I'll try my best. So first of all, as a board, it's appropriate to have a look at whether the benefit design relative to the needs of members is suitable and will meet the objectives that the members want, as well as the overall fund objectives. We also need to consider what benefits are valuable and suitable for members through the various stages of their life. So what value they may place on a particular benefit at a point in their lifetime. We also also then do need to balance the risk retirement trade-off. So while considering that this does impact allocation to retirement savings, and how as a board we then need to manage that while meeting the benefit objectives. So I think the first important point of call is to look and understand what the root cause of the increase in costs is. So again, considering if there is early intervention in place, as Myrna mentioned, and perhaps looking at using the integrated health approach with the employer's healthcare strategy to manage and assist with absenteeism management, trying to ensure that your employees or your members have access to an employee assistance program. And over time, we see that that could lead to an improvement in the claims experience, which would then filter into the pricing of the benefits. When we look at the claims that we're seeing coming through now, it's important to understand the history of this claims experience. Is this experience as a result of the trends that we're seeing coming through? Is it linked to the pandemic and the 3 waves? Or has there been an incremental increase in the claims experience over time? And is there a likelihood that this could either normalize within 12 months after, I don't want to say after the pandemic, but once we have it under control, or there is more individuals vaccinated and we have some herd immunity, would that settle the claims experience and therefore over time the rates on the scheme? Or is this something that is a fundamental problem in terms of your claims experience that you have on your particular scheme? I think those are the things that you really need to interrogate. Have you put caps in place in terms of how much you're prepared to spend on risk benefits and to manage that? So if you haven't quite reached that cap, to then say, well, based on what members are looking for now and in terms of the needs of these benefits in this pandemic, is it necessary for us to now start looking at removing or reducing benefits? Or what sort of plan do we put in place for the next 12 to 18 months to reconsider the design and the structure of these benefits, and then also to assess the appetite for changing these benefits with members. So looking at the age profile of your scheme, looking at your replacement ratios and assessing what that trade-off could potentially be for members. We do know that obviously as these costs increase, it does eat into the retirement savings and potentially allowing for members to contribute more to the funds. I know that that is difficult when we consider that members may not have additional disposable income to do so, but just to try and get them to also understand that there is a trade-off based on the benefits that they may want, the price associated with that, and what their savings objectives may be over the long term. Leroy, thank you. I hope I've answered all the points that were highlighted.
I believe you did. And I think if there are any follow-on questions from the response provided by Belinda, again, I'd invite anyone on the call to add a comment or to ask a follow-up question using our chat functionality. But maybe continuing with you, Belinda, there's a very topical matter that has recently come up with the Minister of Finance having recently announced in a media briefing how National Treasury will be prioritizing allowing members to access cash from their retirement funds. Very curious to hear your thoughts on that, and we would appreciate you giving some input on that conversation.
Yes, Leroy. So definitely hot off the press, with the Minister stating in his media briefing yesterday that it was National Treasury's intention, or it is National Treasury's intention, to prioritise allowing workers to have access to a percentage of their retirement savings. And he has specifically highlighted in times of difficulty. He's also noted that any money taken would need to be used responsibly, and workers would need to use the facility for purposes of relief and to better their own situation. So, for example, he mentioned perhaps addressing their debt or paying off a bond in the instance of his examples. Now, from an industry perspective, we're still waiting for further details from National Treasury. And obviously, the industry bodies in the next week will be engaging with National Treasury on this to understand how and what the process will be to introduce these types of measures. Obviously, it would require a number of legislative changes. Rules of funds would also need to change to accommodate this. And importantly, I think that members also need to be aware of that any short-term access, which has been considered and highlighted in the medium-term budget speech, as well as the budget speech earlier this year, would be on the basis that it would be linked to longer-term preservation requirements. So it's not that this is money that members would be able to access and not have any linkage in the future, that they would just be able to continue to access money. There is a concern that, we want individuals to save. We want to ensure that there is preservation, and that would definitely be coming through in the legislation that would be proposed. So as soon as we have any further details and input from National Treasury, we will make sure that all our clients are given an update, and we will keep you appraised of any changes. Thank you, Roy.
Thank you, Belinda. I think no doubt hot off the press and an interesting development. So we'll be watching it closely because I guess we've got to in our role as part of the industry, we would want to make sure that we've contributed in a way that balances the long-term and the short-term situation here. If I can switch over to Myrna, there's a number of questions that have come through for you, and I'm going to try my best to consolidate them as much as I can. You touched on how we as Alexander Forbes can assist organizations, and someone has asked if Alexander Forbes is able to assist with claims management as well as the associated increase in insurance costs. Maybe that might be for Belinda, but I'm not sure if they were referring to the claims around COVID. That's why I thought it was for you, Myrna.
Okay, I'm happy to answer that. And what I'll also try to do is just answer some of the other questions that popped up, because I don't think we'll have time to cover everything. So as Health Management Solutions, which is part of Alexander Forbes Health, we actually do early intervention, absenteeism management, incapacity management for clients. And that is one of our core service offerings. So we do manage it. And the importance of that is if we manage the claim early and have an early intervention, we prevent it becoming a claim at the end of the day. So with the whole long COVID and not knowing what's happening, what tomorrow brings, if we manage it and pick it up early, then hopefully we can mitigate it. And yes, it can become a disability claim. So if someone is really suffering for longer than the 3-month or the 6-month waiting period, then it can convert into a disability claim. And we actually have seen claims already being paid because of that. So unless we put some early intervention strategies in place, we're not going to be able to mitigate the claims experience, and it will just increase and increase. And there was another question, sorry, Lira, I'll just carry on because it's the same conversation around the psychological side, and are insurers picking up on that? Yes, they are. If it impacts and the person cannot do their own occupation, not even with accommodations in the workplace or an alternative, then the insurance companies are picking up on that. Thanks, Leroy. I hope that answers.
Definitely does. Thank you. Thank you for that. I am trying my best to pull them all together as best as I can. And I think back to you, Belinda, there's a question around whether or not retirement funds should be reconsidering the design of the level of death benefits to protect the fund against rising costs. We'd be keen to get your insights on whether or not retirement funds should reconsider the design of the level of death benefits to protect the fund against rising costs?
Thanks, Leroy. And I think it ties in with the earlier conversation around the cost as well. If you're going to redesign benefits, we have to consider the timing. Is now an appropriate time to start restructuring, for example, your death benefits and your funeral benefit policies, where members are viewing these benefits as more important than even their savings to retirement, because it's a tangible benefit that is being utilized, that they're seeing their colleagues, families being supported by these benefits. So it becomes quite an emotive discussion around, weighing up again the risk retirement discussion. Do we start cutting back on these benefits so that we have more going towards retirement savings? Or is this a conversation that we need to start planning as to how we do this in the event that there is a further pandemic in the future, and how we manage future claims experience, because we've seen what this has done to rates over the last couple of months. So I think it is, again, important, as always, to review your benefit design in any case, at least as a minimum every 3 years. So not just going through your normal rebroking process, but to understand what you have in place and whether it is appropriate given the fund as well, your fund rules, your employer policies. So what you have in place, is it aligned to the employer's incapacity procedures? We've spoken about early intervention, perhaps through the healthcare strategy and disability management, for example, how we can build that into the design and the offering, and perhaps then going to your insurers and trying to negotiate more appropriate pricing on the back of additional interventions that have been put in place with the employer and with the fund. So I think always important to consider your design, that it is appropriate and in line with needs of members, that it is appropriate based on affordability and in terms of what the objectives of or intention of what that benefit should be. So if I take disability, for example, are we looking at an income benefit or a lump sum benefit? And how does that tie in with the employer's incapacity procedures? So just making sure that when you relook at design, to bring all the variables into place, as well as then considering your affordability and what is allocated to savings. So it's not a discussion that you should, as a board of trustees, just have in isolation. You need to consider what's on the employer side and how that can also work in to improve the pricing and the claims experience over the long term. Thanks, Leroy.
Thank you, Belinda. If I can switch back to Myrna, I know you covered leave policies in your discussion, and you outlined certain considerations in that respect. There's a question that's come out around the trend in South Africa in terms of allowing time off to recover and what is reasonable. I know you elaborated on certain techniques or tools that we could try and employ in supporting employees, but in relation to leave policies, have you picked up any trends in terms of organizations allowing time off to recover? And what is your sense in terms of what is reasonable?
Yes, thank you, Leroy. So what we've picked up with many of our clients, as I said earlier, some do have COVID leave that is in place, additional 14 days that they're given. But what's happening now with long COVID is that people need longer than that. So some companies are incorporating it into their policies, other companies are not. So the person actually has to take their normal leave, and then when that runs out, they either go into unpaid leave or extended sick leave. And what we are finding, though, is that there's not I can't say that 80% are doing it one way and 20% another way. There's actually not we don't know what the trends are going to be going forward. We are advising clients is to just relook at the policies and make sure that you do have something in place and that you're treating everybody the same. So it's not because I like you that I'll give you the extra 30 days or 40 days off. and your productivity hasn't been great, so I'm only going to allow you 5 days, there has to be consistency. And I think that's what we've got to just make sure that there is that consistency across the board for everybody. But unfortunately, now there's no trend as yet as to what companies are doing. Thanks, Leroy.
Fair enough. Thanks, Myrna. I guess there's a lot that we are still learning with regards to managing COVID and the impact of COVID. And I'm fairly certain that as Alexander Forbes, as and when we pull out those insights and we're able to share that, we will. I'm probably picking up on that as a bit of a follow-up for you, Myrna. There's a question from Nicola Munitz. She asks, is there any evidence as yet that being vaccinated helps to prevent long COVID?
Okay, I think what we need to just put out there also that the vaccinations aren't going to prevent you getting COVID. What the vaccinations are there for is to prevent the severity and death is what we're trying to aim for. So unfortunately now there's not enough evidence as yet because we're only now starting with the vaccination rollout. And people are only now getting vaccinated. So I don't think as yet we can say there's a trend. Well, we know what the numbers are and if the vaccination is going to reduce long COVID or not. Bearing in mind that already a large percentage of the population have had COVID. So they're the ones who also we need to manage in the workplace for long COVID going forward. And also what we're picking up now is if people have had their first vaccination and they're getting COVID 2-3 days later. We think it's from standing in the queues, or people think that because I'm vaccinated, I now don't need to be careful. Yeah, I think it's something we're going to have to watch going forward, but I don't have a definite answer for you as of now.
Thank you, Myrna. And I guess again, it's not so easy to draw the exact lines to cause and effect, and some of those dynamics are emerging, and more insights will help us to understand things better down the line. And hopefully we can then share that and collectively find the best way to navigate our way through this pandemic. Thank you very much, Myrna. Moving back to Belinda and your talk on war and riot, there's an interesting question that has been posed about employees participating in neighborhood watch and the risks that they might be exposed to. Would that be excluded or included in the cover?
So, Leroy, this is an interesting as well as a little bit of a contentious one. So the insurers that I've engaged with have noted and highlighted active participation in criminal behavior. So we have mostly that the view is that if you are in a neighborhood watch, or like the individuals that I stated were standing in front of their stores to try and deflect or to try and deter the looters from coming in, that they are protecting their property, they're protecting their person, and the view is that that would then not be excluded. However, in the event of a claim, the insurer may require a police report. They may require additional information in order to assess whether there is an exclusion related to it or not. So the messaging that I've received is that this would not be considered as an exclusion. However, there are some who are still liaising with their reinsurers to say, well, this is something that we may consider as an exclusion. Just bearing in mind that I highlighted that if there is any exclusion in this instance, whether it's neighborhood watch or whether you're standing in front of the store, the onus rests with the insurer to prove that it is an exclusion, or why they are actually excluding this as a particular benefit. I mean, we know over the last couple of weeks, people have been protecting and standing at barricades to protect their suburbs. And in that instance, I've had a view that if you're protecting person, property, self, suburb, like the neighborhood watch type approach, that you would not be excluded in the event that a claim arises. However, it is important to make sure that you address that with your insurer, and we are getting information from the insurers to better support the views and to get them to really think about this. I don't think that they've considered this as part of their policies before, because it's not explicitly excluded in the policy. It's not part of the actual conditions where they wouldn't pay a claim. And specifically looking at the term again, active participation, and putting that with criminal and unlawful behavior. And I think protecting would not necessarily fall into that category, unless we looked at my last example where someone decides to take matters in their own hands, and rather than making sure that they get the appropriate help first. Thanks, Leroy. I hope that unpacks it. It is a complicated one, and it is something that if you are concerned, to really discuss with your consultant and the insurer that you have in place on your benefits at this particular point in time.
Thank you, Belinda. I think I guess that's a key point that you've just mentioned now, to consult, and the consultants together with the insurers may be able to deal with any of the specific requirements or considerations on a case-by-case basis. Thank you for that feedback. We do have a survey that's running, and the technical team have launched it on the chat functionality. So I'd like to encourage everyone who's on the call with us to please give us their feedback on the survey that we've opened up. We do appreciate your feedback. It helps us to plan better and design these interactions to be more relevant as we try and continue to engage with you from time to time. So please do take a few moments to complete the survey that we've got running on the chats. We are about to wrap up. I think I've got one more question for each of the ladies. The first question for Myrna is, when is the COVID pandemic going to end? I'm just kidding.
Good, because I can't answer that.
Kidding. The real question is, going back to waiting periods, I guess for the disability cover, if we have 3 to 6 month waiting periods, should we be paying our employees a full salary during this time? Should they have long COVID?
Okay, that once, I think it comes back to the leave earlier. It depends on your policy. So if your policy states that you pay during the waiting period, then you pay. If your policy is silent on it, then I say be careful. You need to actually make sure that you put something in place, because it needs to be the same process for everybody. What some companies do is that the person takes their normal sick leave, any extended leave that the company offers. Some companies take annual leave also, but it depends, once again, if your policy allows that. And then it's either unpaid leave, or they reduce it to 75% or 60% of salary. If you don't pay your employees, what you do need to remember though is that your risk benefits need to continue. You can't stop paying the risk benefit portion and medical aid portion, because if you're not paying the premiums across, then they won't be covered for that disability benefit at the end of the waiting period, or for any death benefit if they unfortunately die within the waiting period. So that's something that companies need to remember that they do need to do.
Okay. Thank you for that. My technical support team are advising me that we do seem to have covered most of the questions that have been posed, but I would like to take the opportunity to give both Belinda and Myrna an opportunity to just give us a closing comment. I think we've covered on quite a lot of information this morning, and starting with Belinda and then followed by Myrna, if you could just, your parting shot as a bit of a recap and maybe as a pointer for those who've been with us this morning. Any closing comments from you, Belinda?
Thanks, Leroy. I just want to highlight, where we are considering looking and reviewing benefits because of the claims experience that we're seeing in this current point in time. Insurers have indicated who are increasing their base rates that this is not something that will carry on in perpetuity. As the claims settle, as we start getting herd immunity, perhaps through the vaccine, we may see the claims experience normalizing again. And in time, your rates should also then start to follow and normalize. As we saw before with HIV, historically we had high rates coming through until those claims started to normalize again. And we very seldom see big increases or increases coming through as a result of HIV. So we do expect that with the pandemic, it should normalize in the future. And that's why it's important to understand the root cause and to ensure that there are interventions in place. Thank you, Leroy.
Thank you, Belinda. Appreciate it. And over to you, Myrna. Any closing comments from Health Management Solutions?
Yes, thank you, Leroy. So just in conclusion, I think what we need to remember is that, yes, long COVID is here and we need to manage it, but it's an incapacity, the same as any other incapacity. So we need to make sure that we have policies and processes in place to manage all incapacity. And as Belinda just said, long COVID hopefully won't be here long term. So therefore, we need to make sure that everything is in place. We need the integrated intervention. We need to look at EAP because mental health is a big issue, not just long COVID. So we need to make sure EAP, occupational health, your medical, your wellness team within a company, absenteeism incapacity, that there's an integrated, holistic approach, and that we look after our employees as one. And we always are transparent. And yeah, that's it, Leroy. So just to make sure that we manage the incapacity correctly. Thanks, Leroy.
Thank you, Myrna. And I think you cover it nicely in that there's a wide range of information that we have at our disposal, and I guess it also echoes what Belinda mentioned. We've got to work through that together, and hopefully we can find the best solutions to each of the situations that we may find ourselves in. And I guess that's a great way for us to wrap up our discussion this morning, in that as Alexander Forbes, we believe our role is to work together with our partners as well as within our internal resources that we're able to harness, but contribute to how yourselves as our clients and other stakeholders can continue to help secure the financial well-being of our members and improve better outcomes for our members, but ultimately try and find the insights and information that will drive both the advice and the solutions we can offer to you. On behalf of Alexander Forbes, I'd like to thank you all for joining us this morning, and I'd like to wish you a great day further. Keep safe, keep sane, and do take care. Thank you very much.